Hello everyone, welcome to ixamBee. In this video, let us understand what is purchasing power parity. India is third largest economy in the world. Start with an example like the price of a McD burger. It will be easy to understand. In this video, we are going to understand what is purchasing power parity, how it works, and importance of PPP versus GDP. Why we study economy of a country based on the purchasing power parity, and we will come to the exam questions most important for you, the objective of watching this video. So let's take an example, the price of McD burger. Say you are getting 2 McD burger in United States in $5. So one burger is costing you $2.50. So you can say closer to 185 rupees if you convert that into INR. But if you buy one McD burger in India, it may cost you whatever 67 rupees, 70, 80 rupees, almost half of the price of what you get in the United States. So if somebody is having an income of say 1000 USD per month in United States, and the same person is earning 75,000 rupees in India, so you can understand whose living standard is going to be better, because 75,000 rupees in India can purchase much more than what 1000 USD in USA, though you will see that the income is equal in terms of the exchange rate. That's why we have to understand the importance of PPP. So India in terms of the purchasing power parity is third largest economy in the world. India accounts for 6.7% of the world GDP in terms of the purchasing power parity. You must have gone through these news headlines like this: India retains its position. So this data is for 2017 and this is the latest data. India has retained the position, so it was already there at third position in terms of PPP. So understanding PPP with McDonald's burger or maybe with a price of jeans, say in India it cost you 755 rupees or $10 in United States. You will see that one jeans is one jeans, it is same. So if that is the situation, you have to understand. So this is theoretical. If that is the situation, because normally it does not happen that you get the equal price in both the place. So here it is equal price. So this PPP is equating the purchasing power of the two currencies to arrive at the exchange rate between them. So if this is the situation, it will be PPP will be equal to the exchange rate. So in this situation, PPP means the price of the jeans in India, the same price of the jeans in USA. So divide 755 by 10 and you get 75.52. But in reality, it does not happen. As we have seen example of McD burger, or you compare most of the goods, especially goods which require services, say maybe a haircut, that is a service. So because GDP is the value of goods and services, don't forget the basics, right? So basic understanding has to be clear. So services are comparatively very cheap, and many goods also like wheat, rice, all agriculture goods are cheaper in countries like ours. So if you compare this PPP, purchasing power of the rupee per dollar in 2007 is 20, means rupee is 20 times more powerful in buying things than dollar. And these comparison takes a basket of goods. Okay, and this has improved from 55 in 2011. Again, it is 2017 data, as I said. And this also depends on the exchange rate. So during this period, exchange rate increased from 46.67 in 2011 to 65.12 in 2017. And this improvement in exchange rate means the PPP per dollar is improving to 20. Let's not go to the details of these PPP calculation. That is not required for the exam purpose, because there are baskets of commodities which will be taken into account and their price level. We have to understand what is this. In theory, exchange rate between two countries depends upon a relative purchasing power of their respective currencies. That we understand. That is what is PPP theory. So it is not only about the simple exchange of the currency, but the buying power of the money. So as I said to you, 75 rupees in India can buy you much more than $1 in United States. Therefore, when you compare economies, so we simply convert Indian economy in dollar terms to, in rupee terms to dollar terms for the comparison, it will not be a fair comparison. Comparison of PPP determines the relative value of different currencies and converting measures of economic activities to be comparable across economies, adjusted for difference in cost of living across economies of the world. Here you can get a good coffee at 100 rupees, but in United States you may have to pay $4, $5. So when you say India's economy is these many lakh crore rupees and convert it into US, you cannot say that that's a fair comparison. As I said, $1 lakh earned in United States and $75 lakh earned in India, giving you two different standards of living. Therefore, when we compare this PPP, some value of the all goods and services produced in a country valued at price prevailing in United States in that noted year. So for 2017 we were doing this. So the base is taken with the United States for the respective countries. These PPP numbers are mentioned on website of World Bank, IMF. You need not to remember these numbers, just understand the concept and the comparison. So if we compare among the global economies, International Comparison Program, worldwide statistical initiative which is led by World Bank under the United Nations Statistical Commission, that provides you this data, and the goal is to collect price data and GDP expenditure to estimate PPP, PLI, price level index and other reasonably comparable aggregates of GDP expenditure for the world's economies. PPP and ICP data are used in indicators monitoring progress towards 8 of the Sustainable Development Goal of the World Bank, International Poverty Line. So you remember Sustainable Development Goals, again very important for exam. This data helps in knowing what is the progress towards 8 of the SDGs. So there are 17 Sustainable Development Goals given by United Nations. So to measure the progress, these data also helps. And in 2017, 167 economies participated in International Comparison Program, and next ICP comparison will be conducted for reference year 2021. So this is not done every year. If you remember, in my last video I told about the cost of collecting data. Performance of Indian economy, if we compare Indian economy at global level, so India has participated in almost all ICPs since 1970, and in 2014 also India came at third position. So India maintains its position, followed by US, China here. And as the news item says, India has maintained this third position. India was also a co-chair for ICP Governing Board along with Statistics Austria for ICP 2017 cycle. That may become an exam question. Sometimes these kind of fine details. Now coming to the exam questions. Which countries secured first and second position in terms of the largest economy based on PPP in the world for reference year 2017? These are the 5 options. You can pause the video. Actually, you shall mark your answer before you go further, so that you know what you are learning, what you are making out of your time and your progress. The correct answer is China and US. I know many of you may have guessed USA and China, but China is contributing 16.4%, USA is contributing 16.3% of the global GDP. So first is China in terms of PPP and second is USA. India is far behind, but India is third. When we talk about Asia, which country secured first and second position in terms of the largest economy in the Asia Pacific region for again reference year 2017? I think easy one, because China you know is number 1 and now it is India. In Asia, China is contributing 50.76 and India is contributing 20.83 to the Asia Pacific regional GDP in terms of PPP. Indonesia is third with 7.49%. Remember Indonesia also. At global level, which organization is responsible for estimation of PPP, purchasing power parity? I think it is an easy one based on today's discussion. And these are the type of questions which come in exam, and we provide for your practice in our course for exams, whether it is SEBI or RBI, NABARD or Bank PO. RRBP or any other exam. So these practice questions with answer explanation will help you to crack the exam. Of course, you will have study notes and videos, but unless you practice right questions and discuss your doubts with the faculty who can help you in understanding things, who have cracked a number of exams, telling you the strategy in your live classes and contributing in the success for your selection, you can experience more at ixamBee. The answer to this is World Bank. World Bank under UNSC does this, and according to the news, 6.7% of the global GDP comes from India, and India is the third largest economy in the world for PPP. What is the position in terms of PPP based share in global actual individual consumption and global gross capital formation? It was also mentioned in the same news. So whenever you are studying bit in detail, the correct answer again here is third. And the last question is what will be the effect of the inflation on purchasing power parity of the currency? So currency is purchasing power. When there will be high inflation, what will happen to it? Think, pause video. You have to think and you can find out the correct answer. The correct answer here is purchasing power of the country's currency will decrease because of the higher inflation. Simple. Inflation means decrease in the buying power of the money. So inflation increases, purchasing power or value of the currencies decline. Quantity of the good that can be purchased using the same amount of money declines when there is higher inflation, and just opposite in case of when inflation declines. If you need any other assistance related to your preparation, you can reach to us at 92055240228. You can WhatsApp, SMS or call. Please don't forget to subscribe the channel right now. Subscribe and press the bell icon.